Let me bring on board Gautam Shah, founder Goldilocks Global Research, to give us his perspective of how markets are playing out. Gautam, you know, the big theme that we spoke about the last time you came here was energy, and that's played out beautifully. Give us a sense now, a rotation at play, or will energy largely continue to do better post this maybe mild consolidation that we're seeing?
Good morning. I think energy is a structural play. I think there are a lot of fundamental tailwinds there. Valuations seem to be comfortable, and the government is at play. I think helping many of the Indian companies to do much bigger things on a global scale. Given all of that, and given the way the charts are, I do believe that energy is a structural play, and we are looking at the index going back to the previous highs at least. That would be the first working target, and then much bigger upside. So the entire basket of power and energy stocks, I think, looks good to me. We've been obviously been committed to it for a couple of months now, and I think we are playing test cricket here. We're not looking at getting out very quickly. So think big. I think there is another 15 to 20% upside on the index, and one should just stay committed. There will be dips from time to time because the rally has been large, and every time that dip happens, it might be a good idea to buy fresh. Now you could go out there and do a basket buying, which is also recommended, or you can just go about doing stock picking because across the board there has been strength.
If you were to do stock picking, Gautam, any names that you can throw at us?
Well, I wouldn't want to put out specific names, but I think all the top 5 or 7 names which are part of the energy index, including some of the PSU power-related stocks, I think they look very interesting on the charts. In fact, even some of the top names in the Adani group, which are part of the energy theme, I think look very interesting. So I think the entire basket, honestly, in the last 5 years, we've seen it. When you get a theme right, everything is a beneficiary. Everything does well. I mean, that's exactly what happened with chemicals. It happened with pharma. It happened with real estate in that 2020, 2023 period. I think something similar seemed to be happening with metals, PSU, and energy, 3 of our favorites in the current market environment.
Gautam, how do you look at some of the auto stocks, Hero Moto, or for that matter Bajaj and M&M? Numbers are in line, and in some cases better because of the GST push which has come in. How are these stocks looking for you?
Well, we would be negative on auto. I think that's been the stance for a couple of months now. And I think with auto being a direct reflection of the economy and with the way the charts are placed, I think there is a greater possibility of the auto index actually losing about 10-12% from here and going back to the March lows. Now, if that were to happen, then I think there is a big problem because a lot of stocks will come off substantially. So I don't think these are levels to commit into auto. Any which way, I'm still questioning the Nifty move and the fact that I feel that the Nifty has a very limited upside from current levels. In that environment, I think auto and FMCG are 2 sectors which are a reflection of the economy, which might not do as well. So move to the other pockets of the market, stay away from auto is my call.
And Gautam, on the index itself, what's the call there? Is it going to be fairly range bound? Is there enough or is there plenty of resistance at maybe 24,500 levels? What should we look at in the near term?
See, I think April saw a phenomenal rally. We were anyway looking at long-term support around 22,000. From there, we saw a lovely 2,000-point recovery, 2,500-point recovery, actually. 24,600, I think, on multiple counts, was and remains a very important resistance. And as you might have noticed in the last 7 days, the market is just taking a breather. There seems to be a fierce battle between the bulls and the bears within a very tight range, 23,800 on the downside and 24,250 and 24,600 on the upside. Till the Nifty does not get past 24,600, I would be cautious, I would be conservative, and I think there is a greater possibility of a breakdown below 23,800. The reason I say that is because the charts on the weekly time frame and the monthly time frame are still not the best, and there is no leadership. Look at the IT index, look at where banks are and the kind of underperformance they have seen in the last 7 days. Look at what Reliance Industries has done. So if you look at 50-60% of the Nifty, they are still on a weak footing. Given that, I don't think Nifty and large caps will do anything substantial, but the broader market strength is here to stay. So that's where the real commitment of capital should be made.
And therefore, what's the sector tilt, Gautam? What's the sector preference? Power, of course, is visibly one of those which you're very, very bullish about. But others?
See, firstly, for a retail investor or for an HNI who doesn't track the markets on a daily basis and finds it difficult to go about stock picking, which is difficult because these days markets are very fast and they're discounting things very rapidly. In that environment, I think basket buying or an ETF buying or just playing the index works. Just to give you an example, the microcap index is up 22% since the March lows. The small cap index is about 20% since the March lows. So if you just bought the index itself, there was serious returns to be made on the table in the last 4 weeks. So that's still a strategy which one can adopt for the next year and a half, because I think small caps, micro caps, mid caps will do well. But within that entire space, I think power, the entire metals pack on which we have been bullish all along, PSU is a theme that I have liked in the last 6 to 8 months. I still feel the entire basket of PSU stocks, power related, metals related, infra related, defense related, capital goods related, I think all of them will do very well. And I'm looking at the PSU index going back to lifetime highs. So these three would be my best bets. I'm also looking at real estate very closely. I think that's an opportunity. And capital goods, the select capital goods stocks, if you look at the top names also, they've come back very strongly. And this is one space where there is actually FI buying and not FI selling. So given that, I think there are fundamental tailwinds and there is demand supply tailwind as well.
Right, quite interesting. Gautam, hi, morning. Wanted to understand, your view on the Nifty a little bit better. You were talking about as to how the upside is getting capped right now, and there is a possibility that we will see a dip below the 24,000 mark, and a conclusive one at that. Tell me, what's the sector where you think is going to show underperformance, is going to weigh heavy on the market? I mean, all through March and April, it was all about IT weakness. Do you think it could be a different sector this time?
We always talk about absolute strength and absolute weakness. Look at relative weakness. I mean, India versus the world, if you actually plot Nifty versus the world index, you will notice that we are at a 2-year low. It just goes to show that many markets around the world have had phenomenal runs. I can give you examples like Korea, Brazil, Japan, even China, which has done reasonably well, and even the US markets with the S&P 500 at lifetime highs. The reason I'm saying this is because you can compare India's performance versus the world. In that context, we have not done anything special in the last 4 weeks. And I think there are still questions about AI disruption because the IT sector is still in a troublesome space. Banks have underperformed in the last 10 days. It's still below the moving averages. And I think they will put pressure on the market. I mean, my conviction for banks is quite negative. And I feel that the banking index will probably pull this market down. So best case, we stay in a range. Worst case, we probably break support levels and go substantially lower, which cannot be ruled out till we don't cross 24,600. So I'm still not saying that we are out of the woods, at least for the large caps, and you need to be careful there.
Interesting you say that about banks, Gautam. Give me a bifurcation. Will it be PSUs, the privates? What's looking like the weakest link within banks?
Aisha, it shouldn't be surprising. Look at what HDFC Bank has done in this entire April recovery and look at where it is today in comparison to the rest of the banking space. When you have HDFC and ICICI Bank undergoing such a phase of underperformance and not being able to rally for whatever reasons, questions about their growth, FI selling, the fact that they are all richly valued versus peers around the world. You can put out a lot of cases there, but it's out there that private banks are underperforming. And I think if that is going to continue, Nifty will find it difficult to rally. On the other hand, in the PSU banking space, I only like the top name. There was a time 6 months back when I liked everything in PSU, but I think they've all rallied. So in PSU banking, I just want to stay with the top name. I think that name will probably do much bigger things for the rest of the year.
Very interesting. What about some of the other sectors, Gautam? The likes of a pharma, the likes of a chemicals. We're starting to see decent numbers. I'm trying to understand as to whether, and pharma did do a bit in one of the weeks in the middle, when you had a slew of approvals come through. What's the sense like? Is it at, where are we at with regard to the index and any preferences in terms of names?
See, it's pretty clear that there are new themes that are coming out. If the market is likely to remain in a range, probably say for the rest of the year, which is what I think is the best case for us at this point of time. There will be newer themes that will do well. I think pharma is one such theme. If you actually look at the pharma index, you'll notice that it's done nothing for the last 18 months. It's been absolutely in a range. But in the last 3 weeks, I have seen relative strength. Some of the pharma stocks have come back really strongly. I don't want to take names, but they've come back very strongly. I think a bigger breakout is coming after 18 months of consolidation, and it will do exceedingly well. So pharma is one space that we continue to like. Textile is another space which I think seems to be making a comeback. Chemical, after 3.5 years of underperformance, they are the first signs of a possible reversal. Power and energy, we obviously like. Adani Group has made a phenomenal comeback. Obviously, disclosure, we've recommended that aggressively over the last 1.5 months, and I think it will do bigger things. So there are newer themes. All those stocks and sectors that didn't do well in the last 6 months are now coming back, which is great from a rotational point of view.
You know, you spoke a little bit about real estate as well, Gautam. So let me try and combine both pharma, chemicals, real estate. You know, the top 3 sectors that you spoke about is high conviction. On these, you're a little bit more of a wait and watch. Is that the right way to think of this? And what are you waiting for? What are the kind of levels? What's maybe the trigger point that you're waiting for before you initiate that buy?
See, I think the worst is over for real estate.
Okay.
I think it's gone through a very large correction in the last couple of years. Just to put numbers in context, the entire real estate index, you can take the BSE real estate or the NSE real estate index, corrected about 50% of the entire COVID rally. Now, even the IT index has corrected 50% of the entire COVID rally. FMCG has corrected 50% of the entire COVID rally. Now, that's huge because the rally was large and the correction has been equally large. And typically in technical analysis, when you correct 50% of the prior bull market, the risk reward starts tilting in favor of going long once again. There were questions about consumption. It's not just about service consumption, product consumption. It's also about real estate consumption, given the AI disruption. But I think real estate has bottomed for sure. I think we are going to see a large 25% rally on the index from current levels. And all the top 5 or 7 stocks, you know, Bombay real estate, Delhi real estate, Bangalore real estate, I think are likely to do well. So it's an opportunity, but don't look at it short term. I think there will be volatility in the short term, but I think now they will start a sequence of higher tops and higher bottoms. So I'm not a big, despite being a technical analyst, I'm not a big fan of timing them on a day-to-day basis. I want to play this more from a 6 to 12 month perspective.
Okay, point taken on that. But Gautam, what about metals? I mean, because in the last lap of the move of the market, it was actually metals which held out up until the March correction, of course.
I've been a big fan of it. In fact, in the last 8 months, whenever I've been on your channel, I've spoken about metals. And I think it surprised a lot of market participants. It surprised a lot of fundamental analysts because there was never a fundamental case to say metals will do well. Look at what non-ferrous has done, and now look at what iron and steel producers have done in the last 4 months. Phenomenal move. The fact that Steel Authority of India today is at 185, the fact that Tata Steel is where it is, JSPL, JSW Steel, where they are, just tells you there is immense outperformance. So I think the structural trends remains. Our working target for the NSE Metals Index is about 14,000. There could be a near-term pullback of about 2 to 3%, but we are advising our clients at Goldilocks to stay invested for the longer term. I think the rest of this year will belong to metals, and now it's more ferrous and not on the non-ferrous side. Also, I believe there is a big rally coming in copper and aluminum and nickel and zinc and lead. You know, the entire base metal rally, I think, is coming over the next 6 months. If that happens, then proxy stocks in India will obviously do very well.
Gautam, I know there's no tracking equities nowadays without keeping a close eye on crude, or rather crude being the primary. What's your own analysis on where Brent is headed and whether we can see sub-100 levels anytime?
You know, I could give you 5 problems that Indian markets are facing right now. And at the top of it is NYMEX crude and what the Indian rupee has done in the last 1 month. Now, that's not a good place to be in. And I don't think that's going to allow Indian markets to do well over a period of time. And I think NYMEX crude is likely to remain elevated. I think the base is now around 80, 85. And I think eventually it can gradually go towards a 120, 125 number. Now, if that were to happen, it's definitely a big impact on the economy, more medium term, maybe not day to day, but more medium term. And even what the Indian rupee has done with at levels of 95, it just tells you that these are things which FIs don't like. And that's probably the reason they might not return in a hurry because there are just too many opportunities elsewhere. So add to it, Indian rupee, the oil prices, AI disruption, valuation relative to the rest of the world. All of these are factors which I think will hamper Indian market performance going forward.
Gautam, I'll just summarize all of your thoughts. You're saying stay away from large caps, the likes of maybe a Reliance, maybe some of the private sector banks, and maybe even IT, some of the heavyweights on the index. Go long energy, power as a theme, PSUs as a theme. PSU banks, stay with the biggest one. Adani Group, Pharma maybe, textiles making a comeback, chemicals making a comeback. I've summed that up. Any other thoughts?
No, I think the key point which I'm trying to make to my clients is be concentrated. I think diversification as a strategy has not worked in the last 2 years. Be concentrated, be in companies that have less to do with foreign policy, and be with companies that have relative better earnings visibility for the next 3 to 5 years. Anything and everything in this market will not work because you don't have the index tailwind in your favor.
And bullish on metals. I'll just sum that up. Thank you so much, Gautam. This has been very comprehensive, and as always, you've been high conviction, as one always expects you to be. Thank you so much for coming in and giving us that perspective.
Thank you. Thank you for your time.
All right.